This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. U.S. crude inventories rose unexpectedly last week. The Energy Information Administration said on Wednesday, helped by release of oil from the U.S. government emergency reserve as well as weaker levels of export. Crude inventories rose by 597,000 barrels in the last week to 470.5 million barrels, compared with analysts' expectations in a Reuters poll for a 600,000 barrel drop. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 409,000 barrels in the week to April 7, AS said.
The global oil market could see tightness in the second half of 2023, which would push oil prices higher, Fatih Birol, executive director of the International Energy Agency, said on Wednesday. Oil prices have surged above $80 since the beginning of the month, after the OPEC Plus surprised markets with an announcement of voluntary production cuts of 1.66 million barrels of oil per day from May until the end of 2023. International benchmark Brent futures traded at about $87 a barrel on Wednesday, and U.S. crude futures traded at about $83 a barrel.
Moving on to the top news in the energy sector.
The U.S. Environmental Protection Agency, EPA, on Wednesday proposed sweeping emissions cuts for new cars and trucks through 2032, a move it says could mean 2 out of every 3 new vehicles automakers sell will be electric within a decade. The proposal, if finalized, represents the most aggressive U.S. vehicle emissions reduction plan to date, requiring 13% annual average pollution cuts and a 56% reduction in projected fleet average emissions over 2026 requirements. The EPA is also proposing new stricter emission standards for medium-duty and heavy-duty trucks through 2032. The EPA projects the 2027 to 2032 model year rules would cut more than 9 billion tons of CO2 emissions through 2055, equivalent to more than twice total U.S. CO2 emissions last year.
China's crude oil imports in March surged 22.5% from a year earlier to the highest since June 2020, data showed on Thursday, as refiners stepped up runs to capture fuel export demand and in anticipation of a domestic economic recovery. Crude imports in March totaled 52.3 million tons, or 12.3 million barrels per day, BPD, according to data from the General Administration of Customs. This compares with 10.1 million barrels of oil per day of crude imported in March last year. The imports were in line with expectations of higher refinery runs and product inventory draws on improved demand following the lifting of COVID restrictions late last year.
Next, we have the top news in metal markets.
China's imports of iron ore surged nearly 10% in January to March to log a record for a first quarter, helped by expectations of stronger steel demand as the economy continues to emerge from the country's now abandoned zero-COVID regime. First quarter imports of the steel-making ingredient climbed to 294.34 million tons. For March alone, imports grew 14.8% to 100.23 million tons, data from the General Administration of Customs showed. The growing trend is in line with our expectations, but the total volumes were higher than we had expected, said Pei Hao, a Shanghai-based senior analyst at international brokerage firm Fizz.
Prices of most base metals found support on Thursday from hopes of better demand from top consumer China, while a shaky U.S. dollar made the commodity cheaper for buyers holding other currencies. 3-month copper on the London Metal Exchange, LME, gained 0.7% to $8,978.50 a ton by 0759 GMT. Analysts expect industrial metals to benefit from China's economic growth this year, with ANZ research noting that the country's overall commodity imports were surprisingly strong last month as downstream restocking continued ahead of construction season. We will now look at the top news in the agricultural sector. China's soybean imports in March rose 7.9% from the same month a year earlier, data showed on Thursday, as buyers in China stocked up ahead of expected strong demand. Total imports for the month came to 6.85 million tons, according to the General Administration of Customs, down 2.7% from February's 7.04 million tons. Lower March arrivals versus February is unusual but may have been due to delays clearing cargoes at customs, said Darren Friedrichs, founder of Shanghai-based Satonia Consulting.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.